and welcome to episode 25 of Mo Money, the investing show for millennials by millennial, where our goal is to educate, entertain, and empower a new generation of investors. I am, of course, your host, the Bud Fox of shows about stocks, MC Mo. We're going to skip the Mo Money market update this week because we got so much time and so little to talk about. Strike that, reverse it. Welcome to part 2 of our discussion about the Federal Reserve. Last week, we discussed the history of the Fed. Very quick recap. Revolutionary War is over. Congress creates the first central bank, first bank in the United States to pay war debt. 20 years later, people don't like it. Charter gone. 1816, second bank in the United States created to pay war debts from 1812. Jackson kills the banks. 1832 to 1907, Wild West, rise of investment banking. 1907, J.P. Morgan causes a panic and crisis. Meeting by bankers and politicians held on Jekyll Island. 1910, to design banking reform and create a new central bank. December 23rd, 1913, President Woodrow Wilson signs the Federal Reserve Act. Let me just say right off the rip, to be honest, I'm not a big fan of the Federal Reserve, so if at times I come off as cynical, you know why, but I do promise to try and present the most unbiased depiction as possible. First thing first about the Federal Reserve. It was created by Congress, yes, but it is not a federal agency like the FBI or the Department of Education. As they say, the Federal Reserve is about as Federal Express. It just sounds legit putting federal in your name, like the Federal Porn Company or the Federal Crystal Meth Agency. See how legitimate those things sound right now? Secondly, the Federal Reserve has no reserves. Third of all, the Federal Reserve is not owned by the government or by us. It is a private company with private shareholders, just like any other private company in the world. The Fed is what you'd call a quasi-government agency, granted a monopoly over the money supply. Probably the best monopoly that you could ever have. It's like if you were playing Monopoly and all the players agreed that you could have as much money as you wanted. So first, let's start with what the Fed is. The Federal Reserve is a central bank. Most countries have one termed the lender of last resort. Basically, most privately owned member banks, the commercial banks, like the ones most Americans use, Bank of America, Chase, etc., they get money from the Federal Reserve as a last resort if their reserves run low, i.e. the money that they have on hand to lend out or give to their depositors. The Federal Reserve was granted 3 major tasks in terms of monetary policy in 1913, which were to maximize employment, stabilize prices, and maintain the purchasing power of the dollar. The dollar has lost about 90% of its purchasing power since the Fed's inception, but whatever, the majority of people don't know that, so they don't really care. And fourth was moderating long-term interest rates. Now, the responsibilities have grown to supervising and regulating banks, which have just done an absolute knockout job of doing. Also, maintaining the stability of our financial system. 1920, 1929, 1937, 1967, 1987, 2000, 2008, and of course, providing financial services to the U.S. government and other institutions, domestic and foreign. Also, they conduct economic research on the economy and then made available to the public. So that's what the Federal Reserve is. A large bank who basically controls the affairs of all member banks and finances of the U.S. government to create a more stable and safe financial system. So how is the Federal Reserve constructed? Well, it's sort of like a pyramid. I don't think that's because I'm calling it a pyramid scheme, because it's definitely not that. On the bottom, you have the member banks, the commercial banks that we all use. Then above them, you have the regional banks of the Federal Reserve. Each commercial bank is the shareholder of their regional Federal Reserve Bank. There are 12 regions: New York, Philly, Richmond, Cleveland, Atlanta, St. Louis, Chicago, Minneapolis, Kansas City, Dallas, and San Francisco. The most important one obviously being the Federal Reserve of New York, being only a stone's throw away from Wall Street. Each region has their own board of directors consisting of 9 people, 6 elected by the member banks of the region and 3 by the board of governors. Now, on top of the regional bank is the board of governors. Their job is oversight of the regional banks. The board consists of 7 members, even though for the past 2 years they've only had 5 because the goddamn Senate can never get anything fucking done. All elected by the President of the United States, approved by Congress, and they serve 14-year terms. And the top dog of the pyramid is the chairman of the Federal Reserve, or the Fed chair, the Fed chief, currently held by Janet Yellen.
Girl power.
Woo! Former chairman that you may have heard of but had no fucking idea who they were. What they did was names like Volcker, Greenspan, and Bernanke. Now, a subsect of the Federal Reserve is the FOMC, as it's commonly referred to, the Federal Open Market Committee. This is the main body of the Fed that enacts monetary policy for the United States. They deal in the buying and selling of U.S. Treasury Securities, which affects the money supply, and makes decisions about the interest rate. They meet 8 times a year to discuss economic conditions and the Fed fund rate. When they meet, it's usually a big deal on the news, and it's all they talk about all day, and they speculate about what they're going to do. Then the Fed chair comes out, talks, and gives some fluff speech, and answers questions super vaguely. Secrecy is the most important thing to the Fed. The Fed has tools at its disposal for manipulating the economy to its mandated preference. The first is adjusting their target on the Fed funds rate. This is the rate that banks charge to borrow excess reserve from other banks. The Fed set their target for a high rate. That means they're looking to raise the rate and restrict the flow of money. A lower target means lower rates, more money, and more credit. Another tool is the Fed's open market operations, so trading of government security. When the Fed wants to increase the money supply, they'll buy government securities from the banks and thus increase the amount of money in the bank's reserves. When the Fed wants to cut the amount of money, they'll sell treasuries in their reserves to the banks, thus decreasing the bank's reserves. Also, they're setting reserve requirements. Go to a bank, you're not really storing your money in the bank, you're really loaning your money to the bank. So say a bank has a reserve requirement of 10%. You deposit $1,000. The bank will hold $100 of that in case you need it and credit you $900 in bank credit. They'll take that $900 and they'll do other things with it, like give out loans, speculate in the stock market, whatever the fuck they want to do. If the Fed wants to increase economic activity, they'll lower reserve requirements, and if they want to cool off the economy, they'll do the opposite. This shows why the Fed is the most powerful institution on the planet. It literally has the power to affect the economy with just a push of a button. So, quick recap, the Fed is in charge of creating the stable economy and controlling monetary policy. They do this by buying and selling U.S. government securities and changing the Fed funds rate, the discount rate, and reserve requirements. More liquidity, aka currency, lax reserve requirements, and lower Fed fund rates means they're trying to ignite the economy by making money and credit more easily available to investors and entrepreneurs. Less liquidity, higher reserve requirements, and higher Fed funds rates mean they're trying to cool down the economy before it overheats. And remember, from the last week's episode, another need for the Fed was to prevent bank runs. The Fed can provide liquidity and lend to banks in case of an emergency if they don't have enough in their reserves and are facing a high demand in withdrawals from their depositors. So instead of the bank going bankrupt for being stupid and lending out too much of your money or doing other speculative things, the Fed, which is funded by the taxpayers, have to bail them out. So like I said in my Make Capitalism Great Again video, they socialize the losses and they privatize the profits. So where does the money come from that the Federal Reserve uses to make all this happen? Well, it comes from us and our future prosperity through government debt. If the Fed or the government thinks we need more money to pay for something crazy like a 15-year war in the Middle East, causing countless American soldiers to die and hundreds of thousands of innocent civilians, do you think politicians are going to pony up the money for this themselves? Fuck no. Why would they? Their constituents will pay for that. So the government issues securities through the Treasury in the form of bonds, bills, or notes. The government sells those securities to the banks that are approved primary dealers by the Fed. The Fed in turn writes a check for the securities to the banks. The banks then give the money back to the Treasury, the government. And the government distributes that money to the army and government contracted companies in charge of making weapons, jets, etc. So as you can see, the Fed doesn't really have money to buy these securities from the government. They simply have a monopoly power to create currency out of thin air because, like I said before, the Federal Reserve has no reserves. So the government issues securities through the Treasury in the form of bonds, bills, or notes. Listen closely here. The government sells the securities to the banks. So they take their IOUs, so they take the bonds, the bills, the notes, they sell them to the banks who are approved primary dealers by the Federal Reserve. So now the bank is holding those Treasury securities, and then the Federal Reserve will write a check for, say, $1 billion, and then they will give that to the banks. The banks will give the Fed the securities. The banks will take a cut, and they will return the money to the Treasury. Now, although this money is for free for the Federal Reserve, it's not free for the government. The government has to pay interest on the securities it issued. And how does it pay for the interest? Taxes. Uncoincidentally, the Internal Revenue Service, the IRS, the evil organization you pay taxes to every year, you know the ones. Okay, they were created in 1913 as well, the same year as the Fed. So the IRS takes your tax money. They give it to the Treasury, then the Treasury uses that money to pay its interest on the securities it issued to the Federal Reserve. Then once the Fed gets that money from the U.S. Treasury, it credits the U.S. Treasury's checking account, and the excess is used to pay for the operating expenses of the Federal Reserve. Also, the Federal Reserve pays all member banks a 6% annual dividend. So the big banks, being the primary dealers who own the Federal Reserve by being shareholders, make money by buying government securities, which is the government's debt, from the Treasury and then selling them to the Fed. And they make money by receiving a dividend paid by the Fed, and the Fed gets the money from your taxes. Any additional leftover money after this happens is returned to the Treasury. But it's impossible to know how much they have left over. They just turn over whatever they want, and we have to take their word for it. But sure, their word is as good as gold, because when have banks ever lied? Large criticism of the Federal Reserve is the lack of transparency. The GAO, Government Accountability Office, does minimal audits of the Fed's operating expenses, but the monetary policy operations are still a largely guarded secret. Any attempt to change this by the Congress have never gained traction or received veiled threats by the Fed's chair. The Fed received complete independence from the government in 1913 and thus is not accountable to anybody but its shareholders. Now, just for fun, I'm going to mention a fun little conspiracy because I like them. Supposedly, the Fed is owned by an evil organization of international bankers who own a portion of all central banks across the world. Any president who has tried to fight them has been killed or tried to be killed. First Jackson, then Lincoln, then Garfield, then Kennedy. The Fed does not belong to us, to the USA. We belong to the Fed. And as long as we continue to keep issuing bonds and other securities to finance things like wars, social programs, and a large government, we will continue to be in debt to them and continue to rob our future generations of prosperity. If you look at the chart of the national debt, our parents and grandparents really did not want to see us prosper. They were like, fuck y'all, we're gonna be living it up and you can foot the bill, you millennial bitches. Thanks, mom and papa, oh mom, opa, mom, and dad. Great. The great Thomas Jefferson once said, it's incumbent on every generation to pay its own debt as it goes. With our national debt, we won't be paying that even if we live to be 1,000 years old. Now, bottom line, love it or end it, the Federal Reserve is here. It's important you know its functions as it controls everything you do in your professional life. It affects your money, your purchasing power of your money, prices you pay, rates you receive on loans, everything under the financial sun. Prints our money from thin air, receives payments from your taxes, and pays its owner a cut. I'll leave it at that. You're free to make your own judgments. I'll post some of my favorite videos I used to do research in the link below. I encourage everyone to do a little bit more research to find out more. Or hit me up in the comments section. We're on Twitter and I'll answer as many questions as you may have. Do not forget to subscribe if you have not done so already. We are still giving away $100 once we reach 100 subscribers. Let's do this. Everyone can use a little bit more money. Thank you so much for watching another episode. You know we'll be here every week with a new episode. For now, don't forget to like, comment, subscribe, and share. Follow me on Twitter. Follow me on Instagram. Like me on Facebook. Mo Money signing now.
Thinking of a master plan. This ain't nothing but sweat inside my hands. So I dig into my pocket, all my money spent. So I get deeper, but still coming up for Lent. So I start my mission, leave my residence. Thinking how could I get some dead presidents? I need money. I used to